We are in March. It's March 1st, Friday, March 1st, 2024, 10 minutes in front of 9 o'clock a.m. Eastern. These are the levels. There are 5 of them this morning to trade against in the E-mini futures. Nothing really exciting happened overnight. They've been just hovering around this flat line near where they closed yesterday. The vertical line on the left, of course, is where the spiders closed yesterday, Thursday, the 29th of February, leap day. We'll check back after the market closes to analyze any and all trades taken in the E-minis based off of these levels. It is now about 15 minutes in front of 5 o'clock p.m. The session is closed now, and let's take a look at one trade that was entered today. The spiders hit 2 levels. First, the 5:10.28 level, and later 5:12.47. That was all after 9:45. Let's just expand this a little so we can get a closer view. The operating level that this one was 5:10.23. That would have triggered, that's where the 5 cent buffer factored in, and that would have triggered a short trade at 10:01, but you see the high was 5:10.21, 2 pennies short. They pulled back, just a spike there, pulled back very fast, more than enough to satisfy a base hit. So I'm not going to enter that trade the second time around because the odds are a lot higher that they would power through. While they did pull back a little bit, not enough to provide a base hit, and they powered through. So good thing that I was not in that trade. And before I get up to the 5:12.47, I'll just adjust this because the operating level was 5:12.42. Let's talk about something else. There was a Fibonacci price extension level on the chart yesterday that added after the fact. It was not one of the calculated levels, but as they were grinding higher yesterday, I put it up there. They never got that high, but I think it was 5:11.10, 5:10.11, 5:11.10. I'll double check that later, but it was up in this general area. Wish I considered putting it on the chart this morning to trade against. Decided against it, and now I wish I had because that would have provided a good trade, but it wasn't there. So the 5:12.42 is where the trouble started because when they got up there, triggered a short trade. They were out of the money pretty quickly. There was a fumble threshold up here that they did give the signal once they got above it with a certain amount of time, and that fumble, unfortunately, the level was it was 7.5 points out of the money when it was reversed, and they did not go higher. That was where they stalled out. So on the reversal, there was more money lost, more points, 5 over 5.5, I think. And we'll take a look at the tracking log to get the exact number. So it was a TKO, and the day ended in the red. And we'll take a look at the tracking log to see the damage that was done. So here you see the level in column D. That was the near miss, but it was not triggered because it got up so close and then pulled away. And then 5:12.47 yielded a TKO. There was a fumble, and on the reversal, it fumbled again. So gave a few points back to the market, and here are the loss based on number of ES contracts traded. So that's a wrap for today and for the week. Just to give you an idea, this 2-week period of time here. Make sure I'm looking at Monday, which was a holiday, the 19th through today, with 2 contracts, the average was 168. 3 contracts, 251, 4 contracts, 335, and so on. So ending the week in the green, but kind of took a few hits. So that's all I have today for today. Hope you found this information interesting, helpful. Thanks for subscribing, liking these videos, and watching.